Last week, we had the Federal Reserve and the Bank of Canada monetary policy announcements. This week, we have the European Central Bank, the Bank of England, and the Reserve Bank of Australia rate decisions. Central bank rate decisions are some of the most market-moving events on the calendar. We got a taste of that with FOMC. The US dollar soared to a 19-month high against the euro after the meeting, and the days to follow, dollar-yen broke above 115. Now, central bank rate decisions are very exciting and happen almost every month. But how do you trade them? First, it is important to know that not every central bank rate decision will cause big vibrations in the currency market. For example, the Bank of Japan and the Swiss National Bank announcements rarely affect the Japanese yen or the Swiss franc, let alone the market as a whole. Rate decisions are usually market moving when a central bank is at the cusp of or in the process of making changes to monetary policy, either in the form of increasing or reducing stimulus, raising rates, or cutting them, or ending a program that's in the process. Typically, when a change is coming, everyone is talking about it. Take the Federal Reserve, for example. They have been talking about reducing stimulus since the end of 2021. At the end of January this past week, they basically said that rate hikes are coming in March, which were the first hikes since 2015. Even though they did not make any changes in monetary policy in January, the dollar shot higher as the Fed confirms their next meeting plans. In contrast, the Bank of Canada also said that rate hikes are coming at the last meeting. But in reaction, the Canadian dollar didn't really see any big moves. Why? First, we can't hide the fact that the Federal Reserve meeting overshadowed the BOC meeting. Coming hours before FOMC, the market basically held its breath waiting to see what the U.S. Central Bank would do. Also, while the Canadians said rate hikes are coming, they did not raise rates immediately, which some investors had anticipated. And that's actually started to be a little bit of a disappointment that limited the Canadian dollar's rise. Many rate decisions are 2 or 3-part events. They have the monetary policy announcement, sometimes economic projections are released, and in many cases a press conference follows an hour or so later. That makes trading particularly tricky because there are 2 possible reactions. All of this is important to consider with 3 central bank rate decisions on next week's calendar: ECB, BOE, and RBA. So how do you trade rate decisions? My favorite way is trade a rate decision before it happens, proactively. I usually have a view, and I love pressing that view the week of the rate decision. This week, for example, it was pretty clear that the Fed was going to be hawkish, and we had some easy trades like selling Eurodollar twice in the beginning of the week. The Euro trade was an easy one because the ECB is one of the least hawkish central banks. ECB President Lagarde even said there's no reason for them to act like the Fed. Pairing dovish with hawkish currency pairs make for the most beautiful trades, in my opinion. The Australian dollar was also an easy trade. Although these were not zip trades or the perfect zip trade, Australian PMIs were terrible, and the RBA, like the ECB, is dovish. Rate hikes aren't even on their radar. So Aussie dollar was below our zip indicator line, which means that it was still in the sell zone. And so when it retraced a little bit, or when it hung tight, we decided to sell again because I was very bullish US dollars, and we had just come off of those weak PMI numbers in Australia. The second way to trade rate decisions is after the announcement is made, reactively. Boris traded FOMC live with our members. He often trades big events like the Fed meeting, ECB, and NFP live. With reactive trading, you have to wait until all of the events pass. So if there's a press conference, you need to wait until that basically passes, so you're not necessarily putting yourself in front of that risk. And I would usually say, 30 minutes is a good amount of time to give yourself, because anything that's significant or important to be said usually is said in the first 30 minutes of the press conference. Then I recommend waiting until the hourly candle closes. If it's a big event, there will be volatility. Let the market settle first before getting in, because there's always some seesaw movements. And if the announcement is significant enough, there will be continuation. You don't want to get caught in the roller coaster moves. The third way is not to trade at all. And oftentimes I'll do that. For example, I'll forego trading euros ahead of ECB and Aussie the 12 hours before the RBA rate decision. There are trading opportunities every day. There's no need to put yourself ahead of these risky events because not trading and not losing is almost as good as winning. Last week, my zip trades banked 144 pips for our members, while Boris made 235 pips trading the Asia and New York power hours. For me, that's 378 pips in January, extending our streak of 15 out of 16 winning months trading ZIP. Past performance is not indicative of past results. We've had good ones so far. Now, I invite you to trade with us every day at bkforex.com if you want to get onto some of these trades.